In 1907, America started to panic. People were rushing to banks because they were afraid their money would disappear. This was not a war, it was not an invasion, and it was not some giant monster attacking New York. It was something quieter, but just as dangerous. Fear. When people lose trust in banks, they do one thing very quickly. They run to pull their money out before everyone else does. Banks were running out of cash, the stock market was falling, businesses were shaking, America's money system was cracking. Today, America has the Federal Reserve to step in during major financial crises, but in 1907, that system did not exist yet. So when panic spread, people did not just look to the government. They looked to one private banker. His name was J.P. Morgan. He was old, rich, serious, and somehow powerful enough to make Wall Street listen. And that is where the story becomes strange. Morgan helped save America, but he also proved that one man had become too powerful. To understand how this happened, we need to go back to the late 1800s. America was growing fast, messy, loud, and dangerously rich. Railroads were stretching across the country. Factories were smoking day and night. Banks were making huge deals. Companies were fighting for control. And rich men were building business empires so large they almost looked like kingdoms. Rockefeller had oil. Carnegie had steel. Vanderbilt had railroads. And J.P. Morgan had money. Morgan was not famous because he invented a machine or built a factory. He was famous because he controlled something every empire needed: finance. Railroad owners, factory bosses, and even governments came to Morgan when they needed huge amounts of money. His office became a doorway to power, but Morgan's real superpower was not just cash, it was trust. If Morgan backed a deal, investors believed the deal was serious. His name worked like a giant stamp that said, "This is safe. Put your money here." But Morgan did not only lend money, he also stepped into broken industries and tried to organize the chaos. When railroads were fighting each other and losing money, Morgan stepped in. He reorganized them. He forced deals. He removed weak managers, and he tried to turn messy competition into controlled systems. People even gave this process a name: Morganization. It sounds funny, but it was serious. It meant Morgan could take messy companies and force them into a more controlled system. To some people, Morgan was bringing order. To others, he was quietly building private control over huge parts of America. One of his biggest moves came in 1901. Morgan helped combine Carnegie Steel with other companies to create U.S. Steel. U.S. Steel became one of the first billion-dollar corporations in history. At the time, that was almost impossible for ordinary people to imagine. A company worth $1 billion? That sounded less like a business and more like a private empire, and people began asking a question that still matters today. Can a company become too big? Then came 1907. This was the moment when Morgan's power would be tested in front of the whole country. America's banking system was fragile. If too many people panicked at the same time, even good banks could be pulled down. A failed stock market scheme created fear. Then fear became rumors, and rumors moved faster than facts. Soon, crowds were running to banks and trust companies. Everyone wanted their money before the doors closed. That is the scary thing about financial panic. Once fear jumps from one bank to another, it can spread like fire. So, Morgan gathered bankers and financiers together, but he did not do it in a government office. He did it in his private library. Imagine nervous rich men sitting around a table. Papers everywhere, tiny banks sweating in the corner, and Morgan basically saying, "Nobody leaves until we fix this." Morgan and his team studied which banks were truly weak and which ones could still be saved. Not every institution would survive. Then Morgan pushed other bankers to put up money. He needed them to act together before the panic destroyed more of the system. He also helped New York City when it was close to running out of money. Morgan was not just helping banks, he was helping keep the city standing. For a moment, America's financial system depended on meetings inside one banker's library. That sounds crazy, but it worked. Slowly, the panic cooled down. Confidence returned. Banks stopped shaking, and the system survived. Newspapers praised Morgan like he had saved the country, and in one way, he really had. But then came the uncomfortable question: why did America need one private banker to save it? Morgan was not the president. He was not Congress. He was one businessman whose private decisions affected the whole economy. His influence touched railroads, steel, shipping, electricity, banking, and Wall Street. It was like a giant web of money. To his supporters, Morgan was a hero. He stayed calm when everyone else panicked. He understood money better than politicians, and he used his power to prevent disaster. But to his critics, that was exactly the problem. If one man could save the economy, then one man had too much control over it. In 1912, Morgan was called before a congressional investigation into what people called the money trust. America wanted to know who really controlled its money. Was it the government? Or was it the powerful bankers behind the scenes? After the Panic of 1907, lawmakers knew the country needed a stronger system. In 1913, the Federal Reserve was created. Morgan died that same year. It felt like one era ending and another era beginning. The age of one private banker saving the country was ending. A new age of central banking was beginning. So was J.P. Morgan a hero? Kind of. Was he a problem? Also kind of. That is what makes his story so interesting. He was the solution to the crisis, but he was also the warning sign that the system needed to change. And his story still matters today. When banks become too big to fail, when billionaires control platforms, companies, markets, and information, when governments rely on private power to solve public problems, we are still asking the same question J.P. Morgan left behind. What happens when one person becomes powerful enough to save everyone? And should anyone be allowed to become that powerful in the first place?